Hello everyone, and welcome back to my channel. If you're returning, if you're new here, welcome. My name is Kevin Holcomb. I've been a loan processor and actually been in the mortgage industry for almost 9 years, seen a lot of stuff, and today we're going to talk about the layering of complexity that can come with buying different types of properties with different types of situations. So here we go. So what do I mean by layering of complexity? So what would be a plain Jane vanilla purchase of a property would just be one person with a lot of money buying a single family house. That's it. There's nothing else going on. They use a regular loan program. Everything goes smooth, perfect credit, no divorces, no bankruptcies, no foreclosures, just straight through. House is in perfect condition, passes all inspections, appraisal comes back, value is good. That'd be just kind of a plain Jane thing. It's like, oh, hey, everyone, we can close early because everything's done. And there you go, okay. And they do, and that's it. Now, when it comes to the layering of complexity, what brought this about is that we currently have, the team, my branch, currently has a file that has all these different layers of what can make a purchase more complicated in terms of you have factors outside of your control that's going to deem whether you can do it or not. You also have other companies involved that also have to sign off on everything and say everything is all good and okay. And so this particular one kind of helped give me this idea of like, hey, if you're buying a house and you've got these other layers, just know that there's this other stuff that you need to kind of be aware of, not necessarily worried of, but aware of. And it really depends on who you're working with and why. And so in this particular instance, this person is buying a condo. Okay, so condos, what normally comes with a condo is you have HOAs. And so that housing, what that does is that's a governing body that has its own rules and bylaws and its own insurance policy. Because when you buy a condo, you're not really buying the structure around it. You're buying pretty much like the walls and what's inside the walls. So kind of like an apartment where you rent an apartment, you get the space, but you don't have anything to do with the structure. It's the same thing with a condo. You kind of are buying the space. Except when you buy a condo, you can generally renovate it, you can do updates to it. There's other stuff you can do with it that you can't do with an apartment per se. But what that does is it offers a layer of complexity. So when you're buying a condo, we as the lender have to get all of their governing documentation, their master insurance policy. We have to make sure the master insurance policy covers things that the person's individual walls-in coverage insurance, it's called a HO6, I believe is what that is. But you have these different insurance policies, they gotta jive together. So when you're a lender, you have to get all that documentation, which can be a chore sometimes. Some companies have it automatic, so you can just get it online. They charge you money to get them. They have to complete your questionnaire, and then we have to run it through our condo department that reviews everything to make sure, okay, this is something they can do. Now you as the buyer, you're not gonna know any of that stuff. And no one else is really going to know it until they get all that documentation and it all gets reviewed. So there might be something else that keeps you from being able to buy that unit that's completely outside of everyone else's control. It just happens. So that's a layer of complexity that can happen when you're buying a different type of property, especially like a condo. Now let's say not only are you buying a condo, let's say you're buying a very expensive condo where you have to get like a second mortgage. So we do these type of purchases where you are using a first mortgage that's usually going to be 80% of the value of the home or less depending on what the loan limits are. And let's say you get a second mortgage to kind of fill in that gap to make sure you're still getting enough coverage and you're only coming in with maybe 10% down. They're called piggyback loans. And so you have a payment on it. It's an amortized loan usually. Sometimes they're interest only for a certain amount of time. Usually they're adjustable rate mortgages, but it adds another layer of complexity because instead of coming in with more money, you're basically borrowing another chunk there. And so another company is what's going to offer that second. So your loan officer has to know all the guidelines to know if you qualify not only for your first mortgage, but if you meet all the guidelines for the second, because they're usually going to be a little more strict. You're going to have better FICO scores. You're going to have just different things. And so when you're going through the process of buying your home, not only are you going through the process on the first, you're also going through that process on the second, and your lender is actually handling that part. So something could come up where you're good with the first, but the company on the second, you didn't meet a guideline or a rule, or they don't like something, and now you can't use that product. Now you got to find another lender to do it. It's another layer of complexity. So that's not super common, but we have done a few of them. So there is something that you could do with that. Now, let's say here's a third layer that can happen. Let's say you have a trust. So you have a trust and you're buying your house and you want to keep it in the trust. So as a lender, I need a copy of your trust, either the full thing or a certificate of that trust, and I got to send it to my legal department. They have to go over it and make sure that it's all good, that you can use the trust in buying this property. That's usually pretty easy to do. You just got to let your lender know up front, hey, I have a trust and I want to buy the house in the trust. Our legal department reviews it. They give the okay, this meets guidelines, and you're good to go. That one's not so much of a problem, but it is something you want to let your loan officer know ahead of time, because sometimes getting them reviewed and stuff like that can take time. Or let's say you don't have a digital version of your trust. You just have this huge binder with all this paper, and you got to know what to send to them, and it has to be okay. So in this instance, with this one purchase that I'm talking about, it has all these layers on it. It's a condo purchase, it's a high-end condo purchase, it's closing in a trust, and it's using a first and a second. So any one of those things could cause the whole thing to not work. Okay, the association might have issues. There may be too many investors that own in that specific condo. That can kill a deal. The second mortgage, there might be something going on where they calculated your income different than you did on the first, and you have to try to justify it as a lender. You have to justify it to that other company saying, this is what we calculated and this is why. And then if the trust doesn't meet guidelines, now you can still close in your name, but if you have a trust, you kind of want to use it. That's why you set it up. So just things to be aware of. Other things that can be complicated is if you have bankruptcies. I don't see them as much as I once did, because we've moved kind of further away from when the housing bubble popped. So I don't see them as much. I don't see foreclosures as much. I don't see short sales as much, because a lot of that kind of took place in the wake of the housing bubble popping and then kind of the dominoes falling over those years. So I don't see them as often, but they are layers of complexity. If you have been divorced or if you pay child support, that's stuff that needs to be reviewed by the lender. And payments going out or payments coming in need to be confirmed and checked. Just extra things to be aware of. Not everyone's going to deal with these things, but that might be you. You might fall into that situation. So anything that you have questions about, if you have a situation where you're not really sure about how it might be treated, comment down below and let me know what it is. And maybe I can help with some guidance on what things that you might want to have, like documentation you might want to have available, that could help make that easier, make that process easier for when you do go to buy a house. But yeah, comment down below. Like the video if you like the content and you want to get more. Subscribe for more information. I'm going to keep posting these probably every week to every other week as new things kind of develop in the market and we want to get updates on it. But yeah, that's it. Have a good one. I'll see you on the flip-flop, and yeah, peace.